Yeah, the flexibility with small futures here and having some extra cash outside of those long-term positions for day trading can yield a lot of fun stuff just intraday and day to day. I mean, what has this week looked like for you? What have you been doing? What are you kind of what prompted you to want to talk about day trading stock market crashes?
No, yeah. I mean, what really prompted me was, I mean, over the last 12 to 18 months now, I would say almost past 24 months since we had the very aggressive stock market crash back in March. And ever since, the market has pretty much just been melting to the upside ever since. So I think a market correction has something that's been in everyone's kind of head. Like, is it coming? When is it coming? Yeah, maybe it's coming, but it's a matter of when it's coming, whatever the case is. Everyone has opinions, but kind of like you mentioned, just given the recent volatility in the past few days, it's like, oh, is this kind of what we're waiting for? We have a little bit of a aggressive, move downwards. We get a little bounce and we get another aggressive move downwards. So that's why I just reached out to you. I was like, yo, if I wanted to take advantage of this trading futures, or what type of products would you look at? Because I know what Tom would say right off the bat. I know the strikes I'm going to select. I know the delta I'm going to look for, whatever it is, but I want to get in Frank's Caberna's head. What are you doing if you see some volatility the past few days?
Absolutely love it. Because you do have this correct. That is like the people who have the most passive investors and traders, like I say, are either long or short, and they're just hoping that things happen in the long term. You've got Tom Sosnoff, options savant, who through his, experiences the last several decades knows, like, if the stock market drops, 5-6%, I'm going to the 20 delta put and I'm selling that put and I'm getting ready to take X out of it. And it might take, 1 week, 2 weeks, 3 weeks. I might have to roll it, all of that stuff. That's kind of medium term. What we're talking about here today is the shortest term. Like, what can I get done today? And out of today or in the next 24 hours. And so with that, let's get into it. And let's start with the small stocks product here. This is going to be one of your smallest equity index futures out there. It's a quarter the size of micro NASDAQ and micro S&Ps. It's because of that, it's a 40th the size of E-minis. And so really small product here relative to other equity index futures. So this is where I would start. And now getting into the concept for today, stocks have started to dip. And like you say, like a lot of people waiting for this correction. Is this correction territory, or is this just another blip? And we're going to rebound and put in a great December here. Only time will tell. But what's the best way to trade these stock market crashes, potentially buy them in the short term? Futures already, just the product presents a great way to do that, because this is a stock product here that is about $8,000 notionally, but is going to cost you less than $1,000 to buy and sell it. You can day trade it without having to worry about pattern day trading and everything else. So this is one of the best things for us to look at for today's discussion right out the gate. Any questions on SM75, the small stocks futures?
No, nothing right off the bat. I think that was a pretty good intro. Kind of how you explained is exactly kind of what I was looking for, that short term. What can I do right now? So let's get into it, Frank.
Yeah, let's get into the strategy piece here, because this is really interesting to people who see these statistics at first. This has been baked into my brain at this, or I guess like it's been branded on me at this point. That
what, like, these statistics right here? Or?
Exactly okay. Right. And people like Tom Sosnoff, this is the foundation for, selling puts or buying the dip, like people like to joke about online. It's a very real concept, because the equity market, even amid a stock market crash, and this data is taking into account last February and March, where the stock market didn't just blip lower and then bounce back. It sank to the tune of like 30-40% at one point. With all of that data, all of that downside action in mind, you tend not to see, Errol, multiple days in a row lower. You tend to see the stock market travel down 5, 10, 20%. But like we're seeing today, down, 3 or 4%, up 1 or 2%. The percentage chance that the stock market is up after any day is right around 50-50, right? That's 53%.
So it's a coin flip.
It's a coin flip on a daily basis. Of course, it's skewed a little bit up because the stock market tends to move higher in the long term. So essentially a coin flip, like you say. Now, those odds change pretty significantly after a down day. You jump from a coin flip to 59%. Might not seem like a lot to people, but in terms of day trading, futures trading, these type of strategies that we're looking at here, that's a big fat edge. Now, Errol, when you look at a down day of $1 plus in this small stock market, which is pretty much around a percentage point if you're looking at other equity index futures, those odds get into the 60 handle. And they don't just get into the 60 handle, 64% chance that you see an up day after $1 down day. Pretty significant stuff, right?
Yeah, it is. That looks kind of attractive, really, as a trader.
And that's what's kind of it's the data behind, without maybe these people knowing it, it's the data behind the buy the dippers out there, is that like everybody kind of knows that after a down day, after a significant down day, the odds are greater in the favor of the stock market not all out crashing than they are in the favor of a full all out stock market crash. And so you look at these statistics, and it's kind of the foundation for why you would look at buying a stock market on a big down day like we saw yesterday. Now, that being said, statistics and patience are required for this stuff, because here's the deal, friend. The stock market here in SM75 was at $82.50 at yesterday's start, and it fell from 82.5 to 81.5. So that's $1 down, and then all the way down to below 80. And today, even with the bounce back, you could have bought too early and gotten yourself into a position where even you traded it right. You got on the right side of the probabilities buying a down day. But if you do it too early, or you don't have the statistics to back you up, you're not effectively buying that dip. Is that making any sense?
Makes perfect sense. So now, real quick, Frank, stop you right there.
Go.
So as we get that percentage on getting a little bit of a bounce, increases when we get a larger dip, like we just saw in the stats. So real quick, what is this from? Why are those stats coming out like that? Is this others' psychology? Is this like a group mental herd thing coming into play? Like, oh, okay, after the first day, second day, I'm more ready to dip by this. What kind of are we getting there?
So I usually, of course, none of this stuff is exact science,
right.
But through my experiences, this is the way things tend to go amid a stock market crash. Okay, something triggers the stock
psychology
market.
going into play here at all, right?
Oh, okay. Yeah, absolutely. Okay. Psychology and just technology and how information hits people. So you tend to see something that kind of triggers negative sentiment in the equity market, right? And there's an initial push lower, right? Where stocks, are smooth sailing, and then it's like, oh, stocks are down 1%. Oh, stocks are down 2%. And then after that kind of like initial news, a triggering event or what have you, or just, sentiment that's not optimistic coming into the market, then you tend to see a lot of passive retail people getting in there, and say the market's down 1 or 2%, and they are getting the news and seeing this stuff maybe 10 minutes, 30 minutes, a couple hours after the initial move there, that you and I, active traders are seeing in the moment. Those people will come in and see, oh, the Dow's down 2%. I'm going to get out of some of my positions, because it's up on the year, and I don't want to have this thing if it's down even more. And that's when you tend to see that kind of like exacerbation of a down move. It's like the equity market should be down 1 or 2%. And then a lot of the people who are just slower to this stuff are coming in and liquidating positions as well. And that's when you get, in my mind, Errol, it's always like, and this is a great example where it's like, the small stocks market is back up to like $81 here today. Yesterday, selling off from 82.5 to 81 was probably healthy, like actual stock market movement. And then the extra bit on top is kind of fear rolling on top of itself and people coming in and being like, I'm going to get rid of this stuff. And that's where the inefficiency lies. That's where the opportunity lies for us. The edge is like that extra push lower. And then the next day, the equity market and everybody's like, actually, that extra push probably shouldn't have happened. And thus we have statistics that say, 64% chance that you see an update the next day, or like we're seeing today, $1, and a half update after a $2 or $3 down day. And these statistics can be solidified in what I think is the best place to go. A great foundational piece, which is the simple standard deviation of a daily change. We outline that for all of our community members to the small exchange for all of our products, past, present, and future. You get the standard deviations and a whole bunch of other data. If you want to join, go to community.thesmallexchange.com and join today. $100, you get reduced fees and all these stats. But Errol, the standard deviation simply lets you know, like, what's a normal day? You and I have talked about it in the past. And so you can see here a normal day, one standard deviation is this 99 cents, or let's just round up to $1. And so that's like the patience and stats come in where it's like, you don't want to buy a dip on a market that has a standard deviation of $1 when it's down 50 cents, right?
Yeah. Yeah. And it seems like common sense-ish.
Exactly. But the idea is that like not everybody can crunch these numbers or has access to this stuff readily available. Right. We're trying to get that stuff out to more people here because it's like, the same with like single stocks is like, if I don't know that Apple tends to move $3 or $4 on a given day and I jump in when it's down $2.50, that thing is it's very likely that it moves through me. We want to take the edge that we have in buying this stock market, big move lower, this crash, if you will, and make sure that we're at least getting in at a good level. Because like I say, if you buy, the 81 and a halves or the 81s, you get here maybe too early, you don't wait for that dollar outside, then even with the bounce back that we're seeing today, you could be underwater on that position. And this is what's really nice is that a pairing of those percentages showing you that buying $1 down or more gets you a 64% chance of winning. And those standard deviations of waiting for that level shows you here that the market went from 82 and a half down to below 80. And now today is bouncing back to 81. And these stock bounces can happen they can happen intraday. Like the market could have crashed yesterday, Errol, and then bounced back by the stock market close. But oftentimes they will take, a few hours to 24 hours like we've seen in this current example.
Yeah. And I feel like this info really helps with context, if that's the term I'm really looking for. Like seeing this bounce, even just reading here, 10 seconds, stock bounces can take 10 seconds or 24 hours. And then just pairing that with the percentages you were giving me with could you go back to the previous slide again with the standard deviations? Yeah. Yep. I feel like that right there ultimately just gives me that context. And then that context gives me a little bit more confidence personally, I would say.
That's what it's all about, man. Because the thing is, I think a lot of people like they see stock crashes or they hear, Dow's down 3% today or whatever, and they're activated. They know there's opportunity out there, but they don't know they don't have the context like you say, and they don't have the product like I say to take advantage of that. Futures, great product to take advantage of that. Like, this thing's down a lot. I can get in and out of this market pretty quick here without moving around my 401k or my IRA or what have you. I can get in and out of this thing with futures and not have to worry about pattern day trading as well if the market does bounce back. But you have to have this patience here, both on the entry and on the exit as well, using some of these standard deviations and everything else. And again, if you do want this data on small stocks and our 9 other products, as well as 50% off your exchange fees for life, community.thesmallexchange.com. Really cool thing, a really nice piece here that's not offered by any exchanges that I know of, Errol, when you talk about CME or even the smaller exchanges, they don't let everyday people be members of their exchange. Different here at the small exchange, everything made for the everyday person, the everyday trader. You can sign up at community.thesmallexchange.com for those reduced fees and updates to all that data on all of our products on a weekly basis. Pretty cool thing.
Yeah, I would agree. I wish I could join something like this when I very first learned about the stock market.
Absolutely.
I was a lost puppy.
Yeah, we try to guide you through the futures experience and everything else, and also give you the lowest rates out there of trading futures. The last thing I'll say, Errol, is I do want to give both sides of this story here, because while buying the dip is a tried and true strategy, you can also look at our current environment and at our current day and see that, wow, the equity market fell, 3 to 5% yesterday, and I could buy it. There's great potential in there. But what if I don't want to be long? I don't want to be a buyer. This information also works for those people who see the start of a crash and want to get short, because patience and these statistics do tell you that, like, if the market's in the hole 3%, and you don't want to get short now that the market's moved that much lower, look for this bounce to sell into. And that's what we're seeing here today, that I think is a really interesting proposition.
Yeah, I saw the call spread so far for today. I'm going to look to SM75. I'm going to be taking a closer look at it the next few weeks at least.
Yeah, absolutely, for buying those dips. And I think it's still up $1.25 is, using those standard deviations, a big up day that could present day trade opportunity in there. But also just to show you, you see this big down day yesterday, the bounce back, but also you're already seeing the market bounce back to $81, and now it's off more than 50% from those highs. So just using all of this stuff, stock market crashes are great for day trading and short-term active traders out there, because in equities, you tend to see both sides of it here. And so, look to buy the dip, but also look to sell that bounce as well. There's opportunity on both sides of it.
I agree. Thanks for putting that input in there at the end, Frank. Not everybody just goes long on these asset classes.
Absolutely, man. Trading both sides is essential to futures trading and everything else, and essential to your music listening. Don't just listen to Adele, okay? You can have Adele and Taylor in the same playlist. It won't seem that weird.
Are you open to genres, Frank? Are you one of those, get off my lawn, this is what I...
No, Frank of like 5 to 10 years ago, especially high school, college Frank. High school, you should have seen me, man. I was like one of those like indie music listener kids who was like, you guys are listening to Coldplay, screw you, and so I was, go listen to Animal Collective. That's where it's at. But no, I'm Frank at 28 is into everything. If you can make a case for something being good and interesting, I'm listening.
Okay, you're open to it. So you could teach us old dog new tricks. You're not old yet.
See, did you see what he did there? Did you see what he did there?
If someone had
you called me an old dog.
If someone did say that, I would say.
Absolutely. Why? What are you trying to hit me to? What's going on?
No. Just for future reference. If I'm like, yo, let me put Frank on this.
Absolutely.
Because there's a few shots at J. Cole over the past few months have been on here. There's a shot here and there, but I just been letting him slide.
That is actually one. This happens to me all the time, and I'm not afraid to say it, where it's like I talk something down and I'm like, I don't like that thing. That thing doesn't make any sense. And then it finally hits, and I'm like, I get it. I get why millions of people like this thing now. So hopefully that moment is coming. Has it come yet?
Let me know when it does, and if it does, we'll keep in touch.
Oh, I went platinum, no features, platinum, no features. Oh my god!
So you know a little bit about J. Cole. Platinum,
I know
features.
J. Cole.
He's done his
of
research.
Course,
let's go.
He's done it. I'm gonna ride for Kanye over J. Cole at almost every day of the week there. But hopefully in the future, I will get into everything Errol's talking about. We love all your opinions on markets, music, and otherwise. Errol, thanks so much for joining me. You can catch Errol on
Tasty Trade. I'm just kidding. Today's assignment, K&I, 2 o'clock Central Time. We're usually on there, but I'll be on Twitter at Errol_Coleman. Just roasting Frank all day. So,
hell yeah, I'm into it. You can roast me. Please roast me on Twitter. I actually do enjoy it. But anyways, thanks so much, Errol. I am going to jump off of hanging out with you and hang out with myself on Splash into Futures coming up next. We're missing Pete today, but I am rested, rejuvenated, and energized, and I'm ready to hit that platform with a ton of futures trade ideas in the next segment. Stick around, everybody. Thanks for watching. Peace.